You're tuned in to Agriculture Today, and we start our Friday show with a grain market update. And as always, we're joined with Key State grain economist Dan O'Brien. Dan, thanks for joining us today.
Thank you, Shelby.
So, starting off our conversation, how we always do when we talk about the grain market, and starting with futures.
It's been an eventful week in the markets. We've had information that had come in earlier from a crop tour that gave lower than expected numbers for production, and since then the market had taken that in stride and has drifted lower. So it's just an interesting time. And so where we've ended up yesterday on Thursday was with the December contract at about 479, which is as low as it's been for a while, and that was down 1 3/4. Most of the action had happened earlier in the week. November soybeans at 1368, down 18 cents, and the December Kansas City hard red winter wheat contract at 727 1/4, and that's as low as it's been for a while too. When you look back at futures charts, I think you find different times of the year when as we come out of having reconciled the uncertainty of the size of a crop, that will tend to drift lower heading off into September. And so again, we're in most years we're beyond the time when we're really worried about the crop. Now this year with heat that's come in, and Chip Redmond, our colleague, will talk about, you and he will talk about that, or have talked about it. But so we're in a situation where we could still have tangible impact upon the crop, and the futures are reflecting that. I think that when you look year after year at the history of corn and soybeans, we have had a pattern of volatility coming during May, June, and sometimes into July and August. If anything, this year we've had almost 2 rounds of that, and this year for especially for corn and soybeans, it's just, you really see that we're highly volatile in May, June, and July especially, and then that have fallen off now, and with with lower volatility has come less, I guess it's indicating less worry on the part of the markets, at least at this point. And so that's led us lower. And given where the supply demand balance sheets are for these crops, you do see that the market probably feels there's more cushion from any downward production, down lower yields for corn than there is for soybeans. So it's there's just not a lot of extra space in the soybean market for supplies to come down. And I think this is a story that's going to be continually dealt with, or a I guess a stream of information from now through September and October, November, and finally ending up in August, when we finally get pretty close to where these final numbers are.
Dan, continuing our conversation into what is cash looking like.
Cash markets, of course, they're following the trend in the futures. We have basis adjustments off them. We see you see quite a bit of variability, I guess. And when you look at the top bids around the state, again, the highest bid for corn, Garden City, 553 on yesterday's closes, 506 in Topeka, and 498 Hutchinson, 486 Colby, 458 Columbus, 466 in Salina. So generally we have come lower. New crop bids, again, the strongest new crop bid is 20 over the Deese contract in Garden City, and everything else either even money or 15 to 20 under. Grain sorghum bids following similar pattern to corn, generally positive basis in most situations. Again, you still see in Salina pretty good forward contract bid for harvest, 473 for sorghum as opposed to 458 for corn, and so that and also that same type of inverted pattern, I guess. Hutchinson 488 for new crop Milo as opposed to 478 for corn. So you see some areas, really the export oriented areas, are really showing some strength. Soybeans all running at least 1334. That's on the low side. You do see a couple areas of the state over 14. Highest bid in Hutchinson area 1425, 1405 in Topeka. Everything else 1378, 1389 thereabouts. Again, Colby on the low side at 1334. Um, and wheat bids again with the weakening of the wheat market. I don't know that many what percentage of farmers in Kansas are still holding their wheat crop. No doubt some are, but we have seen prices now drop below $7 in a lot of locations. The strongest bid, Hutchinson 711 and Salina 709, 701 in Topeka, but Colby, Garden City, both near about 650, and Columbus down in the southeast corner about 672. So um, I think the trend in futures certainly is impacting where cash prices find themselves, and really probably the issue that farmers will be wondering about is once they harvest these crops, if we continue on this low mode, we'll probably fall back into a kind of a defensive position where we'll sell whatever we need to for cash flow purposes, but then probably look to storage if these trend towards lower prices continue.
Talking about a bunch of different numbers, some important numbers around September 1st. The USDA is actually out counting how much crop is there.
Yes, glad you brought that up. On this day, as we talk, USDA enumerators for the first time are going out into a whole large number of plots in the field to measure what they see out in the fields, as we say, and that'll be that information is aiming for crop conditions as we see it on September 1st and 1 or 2 days on either side of that. So it's happening right now. Of course, that information will be what will drive the September 12th USDA crop production and WASDE reports largely. The crop production report feeding into the WASDE and from there. So it's an important time. And you know, the 4 weeks ago, we thought, gosh, we've got moisture, no problem. Generally, most of the Corn Belt, but then what's happened the last 2 to 3 weeks has certainly brought some concerns to the market, and we really have a conundrum now. When you look at what the different set of corn production possibilities could be, that you have the USDA's number from August 11th at 175.1 bushels per acre yield. The Pro Farmer Tour came out with a number of 172. And if you straddle that in the middle, which is kind of the track record of those Pro Farmer Tours, that they maybe overestimate a drop, about 173 and a half. And there's still, if we turn just scalding hot, you could go even lower than that 172. I think for corn, with the large, as you and I have been talking about for several weeks, the historically large planted acreage really raised the ante for how much of a crop production drop we'd have to see to really get us to tight stocks. And we'd have to, even if you drop, at least by my numbers, if you drop to 172 bushels an acre, 14.8 14.85 billion bushels crop, and bring about a little bit of rationing, you're still right at just under 2 billion bushels carry out. And most of the time, we're not going to see explosive markets until we get about 500 million bushels lower than that or more. So really kind of set up, unless we see really catastrophic damage in the next several weeks, for a more of a moderate price harvest. But again, I guess how we finally end up with that remains to be seen. And you know what, the USDA with their crop reports on the September 12th and October, November, and then finally in January will tell the story.
I'm talking about crop yield outcomes. What is it looking like for soybeans?
Well, just the opposite side of the coin, in that soybeans were in a much more vulnerable position with the heat that we just got through, and if we have heat coming on, they'll be affected more by it. Again, that's something Chip will talk about. But You look at that supply demand balance sheet, and if you take 1 bushel per acre off of what the USDA's latest number was, August 50.9 bushels, go down to 49.9 or 48.9, or even further, another bushel, you get it's pretty quickly get to the place where you've got to start rationing usage to keep from dropping below 100 million bushels at the end of the marketing year. And USDA projected 245 million bushels. And gracious, if you take just 1 bushel less, and that seems to be pretty good bet. You're down to 166 million bushels with rationing, and without rationing. If you go any further than that, you're gonna have to see we're gonna have to see prices really jump to ration usage to not, you talk about running out of beans. Well, I don't know that we'd ever run out of them, but boy, for those last few, we'd sure raise the price to make them pretty hard to buy.
Dan, as we wrap up today's conversation, something we've mentioned for quite a while now, but kind of hit home again as we've had this recent heat, it's a weather dependent market.
It During this time of year, during the production season, it has just proven time and again that the market watches the size of these crops coming in, and this is in a way not this is not a typical year. In many years, by the time we get into July and August, we have pretty good crops coming. There's not a threat that we're really cognizant of, and often we'll start to go sideways to lower into harvest without a lot of volatility. Well, gracious, we've had the issues that we've had weather-wise, and until the market takes a sigh of relief and says, okay, I guess we're going to quit worrying about smaller crops, we tend to be in modes of volatility like this. And this year, here it's September 1, and we're still talking about the uncertainty of what could be the outcome.
So waiting on a few numbers then from the USDA and the upcoming WASDE report on September 12th, but then them also being out and counting the number of crops.
Yes, that's right. Like I say, this is a really critical time. And of course, we'll say this now around September 1st. We'll say it again come October 1st. But I would hope that this first time out will kind of set the stage on where we're at, that we'd catch most of the uncertainty, and not have a lot of surprises after this. But again, this first report's going to be going to go a long ways toward determining the direction of the market for the next 5 to 6 months.
Dan, I appreciate you taking the time to join us today and give us our grain market update.
Thank you, Shelby. Appreciate it.
That was Key State grain economist Dan O'Brien. We're getting to a short break now on Agriculture Today, but we'll be back with more ahead.